Welcome everybody. Thank you so much for coming to our first forward planning, succession planning workshop series, sponsored very generously by Barnes and Thornburg Law Firm and Eisner Amper. I would appreciate if folks who are watching could put themselves on mute just to sort of avoid background sound, and we'll go ahead and get going. As I think many of you know, the Women's Business Development Center is a nonprofit organization whose mission is to support the development of businesses owned by women and other underrepresented groups. We work in 9 Midwestern states. Our headquarters is in Chicago. We have an office in the Twin Cities, one in Milwaukee, one in St. Louis, and one in Kansas City. And from those offices, we provide a variety of services, particularly focused on women business enterprises, and both in terms of getting people certified and then also working with you once you're certified and working with corporate partners to provide opportunities. I'm joined here by 2 of my colleagues, Cynthia Johnson, who is our Director of Business Services in our Chicago office, and Sarah Brooke, who is our Director of Business Services in the Twin Cities office. So just a quick housekeeping, the program is being recorded. We will provide the tape or the video to you after with a follow-up note, along with contact information for our 2 speakers. There's not a deck, so you don't have to worry about that, but you will get the recording and their contact information. This is the introduction. And Sarah, if you want to just pull up the next slide, please. Thanks. This is the first of the mentioned of 4 workshops, and we really are looking at this in kind of framing it in a couple of different ways of looking at long-term sustainability and transition planning. The first is we think of them as internal, so that's selling to somebody you know. Selling to your management, selling to a family member, transitioning to a family member, or an ESOP. Now, I will say next week, we're going to be having much more in-depth discussion of these internal options, but we are not going to go into nuts and bolts on ESOPs because that's just a whole other category of stuff. But we'll talk about it a little bit so you'll get a sense of whether it might be something that would be interesting for you to pursue. And then the other type of kind of category here is going to be external options. That's selling to somebody that you basically don't know. So a strategic buyer, an unrelated buyer, a private equity investor, somebody outside of your business or family. And that will be the 3rd week of our sessions. We'll focus on those external options. And then the 4th and final week, and these are every Thursday, so February 2nd, February 9th, February 16th, the 4th and final week will focus on what happens when you make any of these kinds of transitions and how does that impact your WBE certification. So we hope that this will be really valuable, frankly, regardless of whether you're certified, but then also provide you with some good food for thought on that. Can you please go ahead to the next slide, please? So this kind of gives you the summary. And now what I'd like to do is, yeah, we can, okay, now we can go ahead and take the slides down. Sorry, I was one slide ahead. And I would like to welcome Kimpa Moss, who's a partner with Eisner Amper to facilitate our panel, and she will bring our panelists up. So thanks so much, and we look forward to learning a lot with you today.
Great, thanks, Karen. Really happy to be here. This is really a great topic, and I think the series is really going to be valuable to all of us as we listen in on it. As Karen said, I'm Kimpa Moss. I'm a partner with Eisner Amper here in the Minneapolis office. Have a background as a tax person and an operations person and a practice leader in various and sundry practices. So we have 2 panelists today who I think are really going to help us to understand this landscape more. And I would say the framing really is, I think not only will we talk about some of the high level mechanics around this topic, but also we'll just talk about the journey of it as well, and get some insight from both our panelists about that. So let's get them introduced. I'll ask them to introduce themselves, and we'll start with Brad Frank.
Hi, thanks, Kippa. I'm Brad Frank. I'm a partner in the corporate group and the private client services group at Barnes & Thornburg here in our Minneapolis office. I work on both sort of the wealth transfer side, but also on the all the corporate legal needs of my clients, the majority of whom are closely held or family-owned businesses, and through the whole life cycle, from creation to all the governance matters to contractual issues and all the sort of legal issues that come along the way. And I work a lot with a lot of clients on succession planning and transition of their businesses. So hopefully my experience will be useful for all of you. Just real briefly on the firm, we're one of the 100 largest law firms in the country. We have 22 offices with over 800 legal professionals. And I look forward to talking with all of you for the next few weeks.
Great, thanks, Brad. Michelle?
Hi, my name is Michelle Martin. I'm a partner at EisnerAmper as well. I work in the wealth management group and lead the Minneapolis office for financial planning and investment management services. I've been working with entrepreneurs pretty much my entire career, and started my career as a commercial banker. So really was involved in the credit side of the business, building up the options that you would have as an entrepreneur for financing your business, and then eventually involved into wealth management. And we work very closely with our team on the CPA side of our world, that they help with strategic valuation, really starting from the beginning on the accounting side, working through the financial planning and working with professionals like Brad. I think this is going to be a really good journey to discuss, and hopefully we'll be able to give you advice and perspective from many angles here over the next couple weeks.
That's great. Thanks, Michelle. So I'm going to start with a question, and I'd like Michelle and Brad both to weigh in. I think as we sit here and the participants have all decided to join this series of webcasts for a reason. They must be thinking about the long-term sustainability of a possible transition. And I'm wondering if you can help us understand maybe your insights into what are the questions that they should be starting with. You're a business owner, an entrepreneur, and you're at this point where you really want to explore and think about this. What are the questions they should be asking themselves? Michelle, let's start with you.
Sure. I think one of the things that just becomes very natural is understanding and thinking about what have you achieved your goals? Where are you at in the life cycle of the business, and where are you at in your personal goals and your life cycle? I think a lot of times for people, it becomes somewhat intuitive, and they start to see that maybe you have an employee or someone that's really high potential that has the ability to step up. And that would mean you would have the ability to take advantage of that. It might be external situations where you've had some really strong growth in your company over the last several years, and it's an opportune time. So it's environmental, it's internal thinking about your management team. And then I think as importantly, probably most importantly, it's what are you and the people that are close to you saying and thinking about where you're at in this stage, and if the business has served its purpose for you.
Yeah, and I certainly agree with all those. I'd also add, that it can then quickly turn into a conversation or a thought process about, how much do I need to get out of this from a financial standpoint for what I want to do next? But that sort of dovetails into sort of what do I want to get out of this? It may be the legacy I leave. It may be the transition to key employees or family or whomever, or it may be top dollar, and that's okay too. I think you should also be preparing yourselves for questions. If you go to the external buyers or transferees, you'll get questions about sort of your story. And I think it's always good to maybe start thinking, you may already have this as an entrepreneur, but to start thinking about like what we would call like an elevator pitch about, why me, why us? And I think the more you can hone that and believe it and make it true, I think the more that'll come through in the process.
Yeah. It's interesting. One of the things that occurred to me as you were both talking is, being an entrepreneur and a business owner, you're always, every day you're thinking about everything external to yourself. You're thinking about what's going on in the market, what's going on in the economy, what's going on in your customer base, what's going on with your employees, what's going on with your supply chain. I mean, you're thinking about this all the time. It's like consuming, right, as a business owner. And this is a time where you have to really be a little more introspective. I think about all those questions that both of you just mentioned. And that's kind of a timeout or a pause methodology. I personally call those Arboretum days because that's where I go to do that kind of thinking and reflection. So I would highly recommend, no matter where you're at, there's got to be an Arboretum nearby. Maybe you want to go spend the day at the Arboretum. Well, I think one of the things, Michelle, you mentioned it in your intro, was you mentioned valuation. And I'm sure that it's a complex topic. I'm sure people are wondering about that. Do you need a valuation? And at what point in this journey do you pursue that if you decide you need one?
Yeah, so I'll give you my anecdote to that, Kimpa, and there may be some more specific expert comments on that, but I think that it really depends on the size of your business. For one, you have to evaluate the cost benefit analysis of it. I've worked with business owners in the past where it becomes pretty self-evident, particularly if you're talking to different parties externally and understanding that typically you start to see the trend. You can also look at overall valuations that are out in the marketplace based upon your company, a multiple on EBITDA or a multiple of sales. It varies based upon the industry you're in. So external, I think, becomes a little bit easier. You can also do, there's different types of valuations. So you can actually, talk to your CPA and walk through that, and also do limited scope valuations, which I think might get you to where you need to be. So there's a wide array of valuations that are available. I think if you're contemplating an internal transfer to a family member or an employee, that's where it gets a little bit more nuanced. And it becomes kind of what Brad was talking about earlier is, so what are those goals for you? There might be a little bit more of a, but you may be thinking, well, if I have family members or a longtime loyal employee that's going to take over, maybe top dollar isn't the only priority that I have. And so that really comes into play. But I think leveraging, your professionals, your attorney, your CPA, another point I'll make here, which I'm not sure, Kimpa, if it's here, but I think the other thing that's really critical is if you are in this stage where you're starting to think about it, is to really have your financial statements in order. Because at the end of the day, that's where valuations come into play. And if your financials are in order, it becomes a much easier conversation and, quite frankly, a much less costly proposition if you're going to pursue any type of valuation. Brad, do you have anything?
Yeah, no, I would again echo all of that. I think to your point, Michelle, about sort of the internal uses, valuation as they relate to sort of internal transitions or conversations. I think especially if you're putting aside family for a second, but if you're looking to maybe make a transition to an employee, I have seen situations where the employee maybe hasn't spent their whole time thinking about what's my company worth, what's this company worth, what the stuff Kimpa was talking about. And evaluation can be useful in that context to kind of level set for everyone and say, here's sort of the conversation we're going to be like, this is where we're going to center the conversation on this valuation. that a third party, an independent third party told us the company is worth, so that there isn't for lack of a better word, a fight about that as part of it, and it more gets into how are we going to do this and what are the terms in the process. And then again, going back to something I said before, I have found, if you're selling to an external buyer, the market will tell you what the valuation is, right? But before you do that, for some people, and this gets back to this sort of how much do I need or want to get from a sale of my business, if that's my plan. Sometimes you'll talk to an entrepreneur and she'll say, I want to get X. And you say, why? And they say, because I want to get X, or because my friend got,
Right.
this multiple, or somebody I read about this or whatever, right? And I think at the start of a process, if you can get one for, a well done appraisal or valuation for a reasonable fee, it might help you come at the process with a more reasonable expectation.
Kempa, just one other thought to kind of add on to what Brad was saying too, and we're talking about your business and the valuation behind it. You may have real estate, you may have other pieces that contribute to that. And so obviously, appraisals on equipment and building and that sort of thing tend to be a little more straightforward. But that also, by looking at that combined grouping, could also have a much different outcome on your final price as you think about that. So it is really important to kind of sort through that as well.
That's great points you're both making. So I'll ask you a question based on, both of you, your years of experience in working with companies who are going through some type of transition process. When you're selling out into the external market, how many times have you seen that sales price exactly match the valuation? Oh, never.
Yeah.
Right. That's what we call a leading question in the book.
Yeah. I'm not sure. I'm not going to dispute where we're going with that. Right.
Yeah. I think that's one of the one of the things that's part of the journey is managing your own expectations, right? That we've all seen it before. Valuation, somebody gets a valuation from somewhere and falls in love with that number. And an actual negotiation and agreement on price with an external party is much more complex than that. So really valuable to have it, especially if you don't have any type of anchor or range of value, or there's not market information that you can get your hands on that gives you any sense of what similar businesses are selling for. Certainly valuable, just don't fall in love with it. Brad, being the attorney, maybe you could weigh in on what do you think what are the documents, the paperwork, what should really be in order for somebody who's in this stage of thinking about their business? I know Michelle mentioned financial statements, obviously very important, but that's tip of the iceberg, right?
Yeah, and that was first on my list as well. I think that again, especially it's meaningful if you have an internal buyer as well, but certainly external buyers, that's going to be probably item number 1 and 2 that they want to see. And they'll do their own review of it, and it'll depend if it's, without getting into the weeds on this, it'll depend if it's audited or reviewed or the differences. And or they're, depending on the size of the transaction, they may do what's called a quality of earnings review. And so the financials certainly will be a big part of the conversation. You want to make sure that your sort of corporate house is in order, by which I mean, you have on hand if you're a corporation, your articles of incorporation, or if you're an LLC, your articles of organization and the related bylaws or LLC operating agreements and sort of corporate records. So frankly, in sort of small to medium-sized transactions, those usually aren't going to matter all that much unless someone's buying the company, like the actual stock or membership interest in the company, which we don't see all that often. Sometimes we do, just for contractual reasons sometimes. But it's, obviously it's good to have that stuff on hand. you'll want certainly to have around your key contracts. If the way your business is set up, that you have written agreements with your main suppliers or customers, a buyer is certainly going to want to see those and want to understand a lot of things about them, including if you have a high concentration on either side, but also just the terms of those agreements. Can these people get out of them? Do you need their approval to do the transaction? Those kind of things. Oftentimes they'll want to take a look at what kind of employment agreements, if any, you have in place, as well as maybe more importantly to some non-compete type agreements you have with people, either that bind you to keep you from doing things that a buyer might want to do, or that ensure that your intellectual property and just sort of the heart of your business is protected from somebody walking away with it, right? A big one that comes up in the transition process, often people may not focus on this, but a buyer's going to want to see your lease. That falls within contracts, but sort of a special kind of contract. And no offense to any landlords who may be on this Zoom, but landlords, usually get the right to say yay or nay to the transfer of a lease. And they often view that as an opportunity to exert leverage that they think they might have to renegotiate things they don't like. And so that's something a lot of buyers like to get ahead of early in the process. And then the last one I'd add for right now is if you're in a business that's regulated or you need certain permits from the state or the municipality, buyers are really going to want to take a look at those permits and licenses and make sure if they need them, and that can fall into even like if you own a restaurant, and we see all the time like moving liquor licenses around is challenging. So it can be for large companies that do things that involve the government, or down to like a liquor license, you'll want to just understand the rules around those and whether they're going to be able to move around easily, and if not, what the process is for getting the buyer up and running under one, because that can really complicate. That can limit who can be your buyers, and or it can complicate the transition. So, there's certainly plenty of other things that they'll want to see, but I think it's good to start with that kind of set.
That's great. I think again, for an entrepreneur or business owner, they don't wake up every morning thinking, oh, my filing system is amazing and I have everything exactly where it should be. No, it's probably dispersed. I signed that contract 2 years ago. Does anybody have a copy of the signed, those kinds of things. And I think if you're early in the process and you're thinking, okay, I'm going to start getting some of these things together. If you're looking for your contracts, start with your accounts payable. Any supplier you're paying, ask yourself, oh, am I paying this under some contract or agreement with that supplier? And that will be a way to at least start accumulating those things. Go back through your AP for the last year and do it for a year, because if you have something where you're paying a contract once a year, an annual payment that's a multi-year contract, it's going to remind you, oh yeah, I paid XYZ company last April, but I have a 3-year commitment with them. And so I need to, where's that contract and what are the terms in that contract? Yeah, paperwork, never anybody's favorite, but will take a lot of pain and suffering out of a later transaction for sure.
Sorry, the good news for the business owners is that I find if you have a structure within your business that includes a CFO, it often in a transaction, it very much becomes the CFO's problem to do all these things. So you can, if you set up your structure right, you can at least pawn some of this off on somebody else.
Yeah, that's great. Brad, how about another question for you? Should sellers be working with a broker to sell their business? What do you think about that?
And speaking of pawning things off on people, sometimes when you do work with a broker, you'll be able to, they'll help you get your sort of world in order because they want to take a well-ordered seller out to market. So, there and within the sort of broker world, there, as a lot of us on this call know, there are different types, right? I mean, there are more what I would truly call like a business broker. who tend to work in relatively smaller transactions, but also can run a very kind of streamlined process and can do transactions pretty quickly, at least in my experience. And also sometimes, I mean, they can offer kind of form documents and all kinds of stuff to make things work a little more easily. And then, sort of probably a heightened level of that, it would be an investment banker. And, if I'm being honest, it took me a while in my career to fully understand what investment bankers do. And I don't know that I can totally articulate it still, but I have found that they really, both business brokers and investment bankers can add value. And how they do that is they know the market really well. I mean, that's their job. So they know who's looking for businesses of your type, or who might be looking for businesses of your type, and whether those are other companies like you, or they're private equity buyers, or people looking to get into the industry. I mean, all those kinds of things. So they have, to speak in olden times references, they have the Rolodex, right? And then they also are quite good at making you look the best. So they will help you get your financials in order, or tell you if they don't reflect what they need to reflect. And they can even be honest with you and say, you need to prove it up for another quarter, 2 quarters, a year, whatever, before we do this. And they'll kind of take you through what they know will be all the questions that somebody will ask. And a nice part about involving them is, there are other professionals that can do this for you. And we'll talk about that, like your lawyer or your accountant. But those people tend to bill hourly, and investment bankers and brokers, don't worry about them. They will get their money, but only if there's a transaction. So, I mean, they really are doing the work. They're on your team, right? In that way. I don't love this analogy, but it's not that different than, in a lot of ways, than using a realtor if you're going to sell your house, right? And you certainly can go for sale by owner. And I think that works well if you're in a super, super hot market, and or who your likely buyers are and you're in touch with them already. But I do think there's value. The way I put it to clients, like, if you're going to be for sale, right? And I think brokers and investment bankers can sort of help do that and help take you through what can be kind of a overwhelming process and really whittle it down.
Mm-hmm. Yeah, that's great. I think they can also, one of the advantages they have, it's just like you said, they're so in tune with the market. They can also help you realize sometimes the hidden value in your business. You may think the value of your business is driven by one thing, and they may say, no, it's really this long-term contract you have with such and such, right? Or no, it's really this part of this innovative part of your business is really what's the most valuable in the marketplace in terms of a sale and impact on sales price.
And I'm actually I'm working on one right now where the client is a manufacturing company, and they have a very high single customer concentration. The good news for them, though, is that they are extremely important to that single customer because they make sort of a very key part. But there's sort of this ongoing negotiation between my client and the customer. The investment banker, who they just engaged, understands how that will all look to the market when it's done. And so they're actually deeply involved in the negotiation of the relationship, which I think is something that honestly I just hadn't really expected, but they're doing a wonderful job. So, I mean, they can add very different value than you might think.
Yeah, I know you didn't like to use the analogy of the realtor, but I think it's actually a good one.
Well, right. I'm sure they don't like me to use the
No.
analogy.
Yes, I'm sure that would be true. We'll apologize to any investment bankers or business brokers who are on the call, but I think it does help a layperson understand better what that differentiation is, for sure. Whether or not you used a broker or an investment banker, I think we've kind of talked around it a little bit, but there is, you kind of have your team, right? You need your team identified who's really going to be in this with you. And, what are your thoughts on who should a seller be thinking about? Who's really that team?
I think it starts with, themselves and their, if there's like a key person, because, we'll talk about this a little bit more. There's always a question of sort of when do you break the news to everyone? But I think for a lot of people, it takes so much of the stress and frankly, the logistics off you. If you do have a key person in the firm, in the company that you can sort of pull into the fold early. So, that person I would view as kind of part of the team, and whether that's the CFO or an HR manager or someone who kind of knows the business and knows what's going on and knows where all the stuff is, that's always useful. Of course, a lawyer is going to say you need a lawyer. You don't undoubtedly need a lawyer, but I think a lawyer who, depending on which path you want to go down, a lawyer who has experience with sort of interfamily succession planning can be very useful if that's the path you're going down. Otherwise, sort of a general transactional lawyer can help with both, either the transfer to like a key employee or a sale to a third party. I do think, and again, understanding the desire to kind of delay the incurrence of fees. I do think, though, it's useful in the long run to have a lawyer involved relatively early, because we do see situations where clients go out either on their own or with a broker, and they get to a stage where they have a letter of intent, which is, sort of generally a non-binding document, but very much in everyone's mind set the rules for the transaction. And sometimes there's just stuff that they didn't realize they were agreeing to, or that they didn't realize they left out. And it's nobody's fault, but it happens. And it's really hard once you've sort of done all the horse trading to get stuff in there. And I think when the professionals are involved earlier, you can avoid bigger challenges down the road. So even though it costs a little money up front, it probably saves you or makes you more down the road. Then very much you should have an accountant involved, whether it's your existing accountant, or sometimes in transactions, we do see people kind of need to take a step to maybe a slightly more sophisticated accountant, just to help them, again, get everything in order, and or help them bring themselves to market, and or sort of fix things that need fixing. And then also, for Michelle's role, I mean, I think it's really important to have a financial advisor you trust involved, for a couple of reasons. I think the financial advisor can help you start to answer a question I started with, which was, what do I need or want to get out of this, just from a financial standpoint. They can sort of help you frame that, because then that'll drive a lot of the decisions you make along the transactional path. And then also, I think, if you get a good lawyer or a good accountant, they'll also be good at the non-legal, non-financial parts of all of this. The more sort of emotionally intelligent of us can help. But in my experience, financial advisors often get relied upon by their clients for that part. I don't want to, it's not, I guess I'll call it the hand-holding aspect of it, though that sounds kind of belittling, but it's more just the emotional support aspect of it. And I think for whatever reason, and maybe it's I hope it's because they're good at it and they're just, warm and good people. Some of it probably is because they don't charge by the hour, and so they're a less expensive therapist. But I do think it's important to have them involved, because then they can help you start to think about the what comes next part too, which can be very challenging for a lot of entrepreneurs.
Michelle, you have anything you want to add to that?
Just a touch, and it's excellent, Brad. Just thinking about that, and you talked about so what's enough? What do I want to have? And thinking about having a financial advisor and a CPA, an attorney, and your partners there. I think one of the things that financial advisors can add, and it's one of those things to be asking yourself, have you done some planning with your financial advisor? Do they know your whole situation? Typically, that's what we find with our clients, is we may know the bigger picture slightly more, which gives perspective. The family situation, any one of us or your advisors may know that, but really understanding what your goals and objectives are for not only yourself, but maybe your legacy or some obligations that you may have. I think that's really important. The other piece here, and we'll talk about this a little bit more in the breakout, but it does get to the tax issues. and it speaks to really being planful on the front end, because there are ways that you can alleviate the tax burden of a sale if you start planning well in advance. And if you have a financial advisor that is versed on some of those, and it's not even overly complex ideas, it's just really structuring the deal so that you're getting the most dollars after tax versus, you may think that you want to sell your company for $10 million, but at the end of the day, if you did it tax efficiently, 7 would solve the nut. And that gives you a lot more negotiating room. So it really is about the planning and thinking about the after tax return. I see it all the time, and it's just very typical. And you clients who sell their companies, and then we're planning and setting aside the funds, of course, for the tax bill that's going to come. And it's significant. It's a really important thing not to ignore. It also just underlies what Brad was saying about getting your professionals involved earlier. Because if you set that stage and get the terms of the deal set, you may have missed something that maybe relatively new legislation. There's small business credits that can be really opportune for planning longer term. There's just a myriad of things that really can make your transaction much more tax efficient, and thus, give you more actual dollars in your pocket. So, and that can come from really a team that works together. And I think that's the other thing as well. And, like Brad said, you always want to be conscious of, when you're sitting in a room. I've been in a room before and people say, oh my gosh, how much am I rolling here as we have all these professionals together? But I think it is really important that you have your team communicating with one another as well. And you can set the parameters around that and people will respect that.
That's right. Yeah. Yeah, I think those are great points. I would just add on a couple of things. One is I would say, I would just highlight something Brad said, which is you want to work with an attorney who has done transactions. We've been on the other side of transactions where we're like, what is happening? And you're like, oh, that attorney has never done a transaction before. That won't be the way to go, for sure.
And even if that leads you to winning, so to speak, it also leads you to paying a lot more to your own attorneys.
Yes, that's
it's
right.
a mess, and not, it's okay. Like, people should have their expertise, but
yes,
let the people who have the expertise do it.
Yeah. You don't want your attorneys and accountants teaching.
Right.
You don't want their attorneys and accountants teaching your lawyer about transactions. I think the same thing on the tax side. I would say you may have a accountant that you work with who does a fantastic job with your financial statements and your day-to-day accounting needs and getting your tax compliance taken care of and all of that. Not all tax professionals who can do compliance are versed in how to properly structure a transaction for tax purposes. And again, you could, your accountant, if they're not experienced, may be able to refer you to somebody who is very experienced in that area. They may already have a relationship or someone else in their own firm, or your attorney can refer you to somebody who has that experience. The last thing I would say would be on the financial advisor side. And I think this happens often with entrepreneurs. They have poured all of their available assets into their businesses. And so when Michelle talks about a financial planner, many business owners don't have a financial planner. They've never had a financial planner because they've never had any liquid assets. And so we see it all the time where really for the first time, a business owner is going to have a liquidity event. And now it's a whole different ballgame in terms of their financial planning, whereas previously was all inside their business, and it was all about, at what pace were they going to make investments in the business and add assets in the business. And so very different mindset. And I think when it comes to the financial advisor, I think the other reason that business owners lean heavily on them in a transaction is because of trust. And I think, you have to trust your financial advisor. They're going to see it all. They're going to see all the financial information. And so you just have to have a high level of trust. And I think it does lead to that, in general support too, that's not just strictly within the confines of being a financial advisor.
Kimpa, just to add on to that point, and I think we touched on this a little bit, but as you're working through the planning, and if you haven't had an advisor that actually puts a pen to paper and does the plan and actually walks through the black and white of that looks like and starts projecting out what your cash flows are going to look like after the sale, you should really think about that and engage maybe someone who has that capacity. It's really difficult to put yourself alongside the transaction. It's very common for us to hear, I'm working on the deal right now, I'll talk to you when it's over.
Oh yeah.
And quite frankly, that's late. It's not, and so you
Right.
want to just as we're talking about all the professionals, you want to work with an advisor, a financial advisor who is in front of the transaction with you, working with your team and actually running projections for you personally, while the attorney and the accountants are, and maybe your broker are running projections for the sale. You want that to match, and you want someone that understands that relationship.
Mm-hmm. Great. I think that's a really good discussion. I'm going to switch direction here for a second because I want to make sure we get to this question. Michelle, maybe you could talk a little bit about, what are the financing options for a buyer to consider? So this is when you're on the other side of the table, you're thinking about buying, or even in an internal transaction, right? There will be financing needs. So what do you want to weigh in on that?
Sure. There's a myriad of options available, and it really depends, obviously, on the transaction, the size of the transaction, who you're looking at. If most business owners, as you all probably know, if you've built your own company, are relying on, even credit cards, right? I mean, you're not going to sell your company on that, but you're going to potentially have a buyer that has the ability to go to the bank and get traditional bank financing. Potentially looking at personal assets to add security and collateral to that transaction. The SBA is a vehicle that can be really helpful in terms of giving much more breadth and better terms to a transaction. There's specialized finance folks out there who may be able to take a piece of it, whether it's equipment or, we talked about the real estate, maybe a bank does part of that. And then obviously there's the seller finance aspect of this too, where you can, again, if you've done your planning in advance and are thinking, well, I don't need the entire transaction up front, I don't need all this immediately, you could potentially sell your business on an installment sale. That allows you to spread out the gain over the course of collecting those installments, but it does tie you into the success of that business over the long term. So that creates a risk for you. There's always risk reward in all of these decisions that you're going to make. There's also community development dollars out there through different organizations. So again, really understanding, tapping your network, tapping organizations that provide support in your local community are really important. And a lot of them are going to potentially work alongside your banker. Typically, if you're working with a community bank or even a large national bank, they'll have partnerships that specialize in small business financing. So those are just some ways to think about it. Again, it really does depend on your buyer and kind of what their financial situation looks like coming into this. If it's another company, it may an established company, obviously much less to worry about. But if you have an internal buyer, or possibly someone who's trying to get into your industry or a smaller type company, those are factors. I would say one thing to really be aware of, and I go back to a client that I worked with several years ago. We actually were evaluating 3 different offers, and they were quite different. but one of them in particular was this whole idea of, what's most important. And so the buyer was an established business, had a relatively strong reputation in the market, and offered to buy on contract or an installment sale. The interesting thing about it was they didn't want to put much money down. And so that raised a flag in my mind when we were working through this. And so one of the things I want to stress is if you are taking paper or selling on installment, it is really important, and it's totally to be expected that you should do the analysis on your buyer. And if you don't feel like you're comfortable with that, that's where your team comes into play and starts to analyze their capacity to get financing, to service the debt. You know what your business does, but you have to evaluate them not only on their capability and their management skills to take over the business, but you should also look at their underlying financial strength.
Mm-hmm. Yeah, I don't think we've mentioned the term due diligence yet, but I think that's exactly what you're talking about, and that can go both directions. Brad, you want to talk about that for a minute? I know this is a surprise question, but
yeah, no, those are allowed. I like to warn my clients when they're the seller that I compare due diligence to a colonoscopy on paper. So it's the buyer will come in and depending on who their advisors are, will ask you all kinds of questions. And it's, for everything from show us your financials, show us insurance claims against you, warranty claims against you, show us your sort of employee list, compensation, benefits, show us your benefit plan, show us environmental reports, show us your lease, sort of they're trying or their advisors are trying to get a full sense so that they know what they're buying. They know what the risks are. And then ultimately that turns into conversations around purchase price. And the higher the risk, oftentimes the lower the purchase price or the more contingencies, right? So that's the point of generally the point of diligence on the buyer's side. If you're a seller though, to Michelle's point, and dependent on the structure of a transaction, you will want to do not the same level of diligence, but certainly financial diligence on the buyer. And that may lead to asking for guarantees from other parties or security interests in some of the assets you're selling and things like that. So yeah, due diligence can be a two-way street, though it's I don't know, more lanes going towards the seller.
Mm-hmm.
One other point that I would just make is you have every right and should, if they're working with a financial institution of any type, it's very typical for that banker or person at that financial institution to provide proof of financing and approval. And even if it's something as simple as a home equity line of credit, for a down payment or something like that, those are all things that in the banking world or financial professionals, we actually will say, yes, the client has $500,000 in their investment portfolio that is available to fund the down payment on this transaction. So it's also really helpful just to get those assurances along the way.
Mm-hmm. Great. I think we've several times we've kind of passed through the tax consequences a little bit. Brad, I thought maybe you could talk a little bit more about that. Help us understand kind of, again, big picture, but a little bit more about that. Because it sounds big and scary, right? Yeah.
The CPA is asking me, the non-CPA, to talk about.
Yes, exactly.
But so I would, I think obviously a transition of your business can implicate multiple tax systems even. So first, there could be a conversation if there's going to be a transfer to a family member. And I think Michelle mentioned this sort of early in our conversation. There could be certain ways you may want to structure that involving the gift tax system, and that may lead to different valuations as well. And so that's sort of something for those of you who may someday be interested in internal transitions to family members. That's something you'll want to consider with your advisors. But focus more on, and what I think the question is more meaningfully about, is about income taxes. I mean, I guess generally the answer is there will be income taxes associated with most of these transfers. The question I think usually turns into with tax advisors, how much of this can we create? How much of this can we make capital gains taxes, which generally have lower rates, and long-term capital gains, which generally have lower rates as opposed to ordinary income? That can quickly, though, dovetail into a conversation about sort of what's the cash flow of the business and what can it support? And, can some of that be note payments, which may get one sort of treatment? Does some of that have to be compensation to the seller, in the form of like an employment agreement, which normally would be ordinary income? And so obviously there's a lot of nuance, a lot of moving parts to the tax conversation. And I think to from what we've heard from all three of us, that's more reason to have your tax advisor involved earlier in the conversation.
Mhm.
There are certainly, we heard the term ESOP very early in the presentation. An ESOP is sort of a creature of the tax code and has its own tax benefits, or can have its own tax benefits that, frankly, some of which are sort of shocking and kind of seemingly unbelievable. And so if that's a path you're considering, that's something where you really need people who understand ESOPs and know what they're doing, because the government, for good reason, doesn't make it easy to achieve some of those sort of heightened tax benefits. And then the last thing I would say about taxes is certain types of buyers are going to, they'll have their own point of view about how they would like the tax aspect structure, because it impacts how they can depreciate assets over time. And or we see a lot of private equity buyers offer what they call a rollover of part of your sale into their private equity fund, and that can have tax benefits for you. And they kind of play that up as part of the transaction. So again, you'll want your tax advisors involved early, because if you have a financially sophisticated buyer, they may well present what they think of as run-of-the-mill structuring suggestions, because it's just sort of how they do it. But very little of that is intuitive. And so I think you want people who have sort of seen it and done it and will be able to articulate to you not only what it all means, but how it impacts the bottom line.
Mhm. Yeah, I think that when you talk about getting somebody who's knowledgeable about the tax structuring involved early, you certainly want that to happen before you're at a letter of interest. Because the letter of interest, it's, as you said, it's too late. The basics of how the structure and the transaction are going to work are already set, and changing the tax consequences after you get to that stage would be very difficult because of the required change in the terms. And so, yeah, it's early on understanding, really what are the implications.
Yeah, totally agree. I think the way I usually talk about it is you can change. So, letter of intent is not legally binding, right? Somebody can't go into court and enforce it, but it very much becomes binding effectively between the parties. Yes. And you can change stuff in a letter of intent, but it will cost you in something else.
Yes,
and so,
that's right.
So you want to, you want to be holistic in your approach.
Yeah, from the get-go. How about, I think this was mentioned earlier when we were talking about, who should you really have as part of your team? And we talked about, having someone else in your business, possibly your CFO. A lot of times it's a CFO or somebody's playing that kind of a role, who really becomes kind of your confidant and partner in the early stages of this, as you're starting that process, as you're starting to assemble your advisors, that kind of thing. How about communicating with other people, either other people in your business, communicating with your customers, communicating with your suppliers? What are your thoughts on that?
Yeah, I think when it's an internal transaction, there's sort of one set of issues, because especially if certainly if there are multiple employees who thought they were up for being the recipient of the transition. So, that can lead to certainly political issues and discussions, but also just, if it's everything's happening internally, more likely the word's going to get out, because someone's going to know who it is that's buying in and or buying it all. And so I think there's, there should be discussions between the parties about the internal communication if there's an internal buyer.
Yeah.
If there's an external buyer, the internal communications still matter. Sometimes the buyer will drive that. There may be certain key employees who they want to know will stick around. And so they want to get, they may want to get employment agreements in place with those people. They may want to, well, we can still do them. They may want to get non-competes in place with those people. You in advance of a transaction may want to offer what people call stay bonuses to people that are key to make sure they're around because you recognize the way they add value to your organization. So sometimes there are certain key employees who sort of have knowledge of the transaction leading up to it, but often, again, we keep talking about this letter of intent, but often it's not very common that you would have those conversations before that. I would say because you want to know something seems more likely than not to happen before you let the cat out of the bag. The broader set of employee conversation usually happens right before closing. And oftentimes is with the buyer comes in and it's sort of, they get to make their pitch. It's sort of, the kumbaya kind of moment. And then with regard to third parties, some of that might be driven again by the buyer. If they want to talk to your customers, we usually tell clients, obviously, push it as close as you can to the end, because for the same reasons. Usually there comes a point in the transaction where it's pretty obvious it's going to happen.
Yeah.
But sometimes that's not more than 5 to 3 days before the transaction actually closes. And you don't, again, want word out there in the market that this is happening because others may take it as an opportunity to come after your customers, and or your customers may ask, hey, what's going on? But some customers and other third parties contractually you'll have to go tell them because they'll need to approve the transfer of their contract. So, I guess there isn't a specific answer other than I usually do recommend to push back on buyers want to have these conversations early always to get it out of the way. I would usually push back and try and push it as late in the process as you can.
Yeah, I would say one of the things that I think can be a surprise to a business owner who starts in this process is early on, if you, let's say it's your CFO is really your confidant, the two of you are working together on this. As it becomes more and more something that you believe is going to be a reality, it becomes harder emotionally not to tell your longtime employees. And it's because as the weeks go by, things come up, right? In the normal course of business, you're coaching people, you're making commitments for the future, you're all of that. And it is it can put you in a state where you feel like you're walking a very thin line about being authentic and real with your employees. And that can be very difficult. I've seen it many, many times that business owners struggle with that. And I think the thing to keep in mind is that really is a very short-term thing. It feels so heavy in the moment, but that's not going to go on for years. It is probably a matter of weeks between then and when you're really in a position to share the news, if something's actually going forward. And if nothing's going forward, there was no need to share the news in the first place. So I think that can just be an emotionally wrenching kind of thing that could take you by surprise, that you don't realize what the toll that is. So yeah.
Awesome. This has been such great information and helpful dialogue. We're at the point where we're going to be transitioning into the breakout rooms. And how that will work is Brad Frank, who is a partner at Barnes & Thornburg. He will be hosting a room that will lead discussion regarding legal issues. And then Michelle Martin, who is a partner at EisnerAmper, will lead discussion related to tax issues and business advising topics. So please, in a moment, select your breakout room, and you'll have roughly 20 minutes for discussion. Once that wraps up, we will come back as a large group and have a bit of a wrap-up moment. So thank you so much for joining us and great information.
You should be able to see and join whichever room you prefer. If you don't automatically see the breakout rooms on the bottom of your Zoom screen, go to the 3 dots on the right-hand side that say More, and you can select a breakout room. If you have problems getting there, just wait a moment and let me know and I can get you there. I also just want to join Sarah in thanking our panel. Wow, we could have gone on for quite a bit longer. And so thank you very much, Kimba, for leading such a robust discussion. And so if there are people now who would like to get into a breakout room and are having trouble, if you can take yourself off mute, please say your name, because I won't know who you are otherwise, and which room you want to go to, and we'll get you assigned.
Hey, Karen, this is Terry McNally.
Hi, Terry.
How are
Where do you
you?
want to go? Good, how are you?
Good. I'd like to go to Michelle's room.
All righty, you are on your way. Anybody else? Gloria, are you looking to go somewhere?
Yeah, you know what, Karen, I'm sorry. I got a major emergency at work and I
Oh,
was
no worries.
multitasking. Where do
we've
I
got-
need to be?
We've got breakout rooms going right, just starting. You can either go into the one that Brad is leading, Barnes and
And it-
Thornburg Law Firm.
And its
or,
topic again is what?
It's more on the legal end of things, really, and it's a chance to just sort of ask questions and stuff too. And then Michelle, who's going to be talking a little bit more about the tax.
The legal piece.
Okay.
I'll
you
go
are
into
on your way.
Brad's.
And Ellen, do you have a preference or?
I have a compatriot who I'm trying to find out which one he's going in.
Oh,
So
okay.
I'm gonna do the other. All right, no, I'm gonna join right now.
Okay, great. Julie, Veronica, Elizabeth, Britta, Andrea, anybody who needs help, just let me know.
Yeah, I would like to go into Brad's.
And Walker? Okay.
This is Walker, yep.
You are on your way.
Thank
you.
Karen, I'm sorry. I'm going to have to bounce for a minute. I'm trying to deal with something here as
No,
well.
no worries. No
I'll
worries.
circle back and we'll hopefully see you next week. Thank you all. I really
Yes,
appreciate that.
absolutely.
Okay.
And Patricia, where would you like to go?
I was just more interested and I think more in the prep before, as far as like gaining that sales that, guaranteed sales, and, when you're in a service that I don't have anything guaranteed,
Yeah.
it's just relationships. So I didn't think that I was ready to talked about the legal stuff so much yet, but more so driving business on a reoccurring basis. So
Maybe going to talk to Michelle. I mean, whichever. And you can. I'm neglected to say you can bounce from one to another if you want.
Okay.
Let me go ahead and send
yeah,
you
let's
over
try
to
that.
Yeah.
Okay, thanks.
You should just be able to accept and then, yep, looks like. Yeah. Okay. Andrea, Britta, Elizabeth, Harriet, or Veronica, if any of you have issues or questions and want to get somewhere, just please come off mute and let me know. Yeah, it looks like everybody is where they are going to be. Mary Cruz, welcome. We've just joined into breakout rooms. You have the choice of either going to speak with Brad Frank with Barnes and Thornburg Law Firm. That's going to be a little bit more on the legal side, or Michelle Martin, who's with Eisner Amper accounting firm, and that's more on the financial side. Do you have a preference, or you can just, I think, pull it up and join yourself? But if you let me know where you want to go, I'm happy to send you. They've just started. Okay, if anybody is trying to speak, I cannot hear you, just FYI.
Hey, Karen, it's Kimpa.
Yeah.
Hey, I didn't get to kind of that very last question that we had for the panel. So I am gonna do that when we come back from the breakout rooms.
Perfect.
It'll be
Yeah.
1 or 2 minutes that Michelle will talk about that. I was
Sure.
just gonna warn you.
Yeah,
Yeah.
no, that's great. Sorry about that.
No worries, no worries.
I think.
I thought we had a couple more minutes, so yeah.
I
No
think
worries.
that Sarah was getting nervous. I think a learning for next time is we need to figure out a way to communicate better just before we cut you off like
Oh,
that. But thank
sure.
you.
Yeah.
I mean, it's been tremendous. So, okay.
Great panelists. Yeah, they're fantastic.
Yeah, I'm actually going to. Welcome back, everybody. We are going to have Kimpa and the panel back up for a minute and have them finish up one last question, and then
Great.
we'll wrap up. So I'm going to go ahead and let's see. It looks like Michelle's group is still coming back in, but
Oh,
we'll get
okay.
you guys set up. So
Okay.
yeah. And is Michelle back? Yep, there's Michelle. Oops, sorry. Michelle, we're gonna pull you back up for one last question. All
There we
right,
go.
Absolutely.
take it away.
Yeah, we ran out of time before we went to the breakouts. And I think this is a really important question. So I texted Michelle, we're going to come back to this question because it is so important. So, someone has followed all this advice, listened to the other webcasts, are moving through a sale transaction. They're at the point now, they're about to close the transaction. They've sold their business, and now what? You're on mute all of a sudden.
I alluded to this in our breakout camp. I didn't see your text, sorry, but
Okay.
it is a now what scenario, right? You're sitting there and you've got, this big chunk of funds probably, or a stream that is sitting in your bank account, and you're like, what do I do about this now? What does this feel like? So first of all, on the finance side, this is where your plan comes into play. This is where you begin to implement it. And I tell people, our goal here is to make this feel like it always has. You know what you need to live on. Let's look at what this sale brought you, and hopefully allow you to create a really a lifestyle and a way of living that's just kind of picking up where you left off before you sold the company. One of the biggest mistakes I see people make is they kind of are paralyzed and they don't do anything, and then they panic because they have this big chunk of money, but they have no cash flow. And so the key is to convert that into a cash flow that is comfortable. And you may have not had experience in the market previously, so that becomes really scary. You're putting all this money into the stock market as you see it. So it's really important with your financial advisor to really map out a plan, understand how what your risk parameters are, how this is going to be deployed, and make sure that you're working with someone that is experienced in this and actually listening to what you're saying. So that is number one. And then I think the other thing, and we've touched on this, Brad's touched on this really well. This is an event that affects you, it affects your family, and it's really emotional. And so allow yourself a break after the deal's over, to give yourself a little bit of time to get used to it and kind of figure out, what does this next phase look like for me? And potentially, we were talking in our breakout, we had some people that were planning for a sale 3 years, 5 years down the road. I mean, really planful. So, what are things that you can do now? What are boards that might be interesting? What are things that are going to continue to engage you so that emotionally, it's not just a cliff for you? Because that emotional piece is really, really important. So those are just a couple of things. And then, it's also like, what strengths do you have that you had in your business that you can carry forward now into either, maybe it's another type of business, working a little less, or maybe it's giving your skills to a charitable organization. But those are things that I think really bring fulfillment. And I talked in the breakout just about mindfulness and being aware and paying attention to what you're feeling and what those around you are feeling. I think it really helps. If you've done your planning, this part is about execution.
Michelle, it's interesting. This whole conversation is kind of reminding me of, and you'll know who it was. I unfortunately can't remember. We had a speaker in a few years ago to speak with our wealth management clients. And he was talking about retirement, but it really applies in these situations as well. And he said, the goal is to have enough financial resources that you can sleep at night and enough purpose to get out of bed in the morning.
Mhm.
And I just thought that was pretty profound. And I think it really applies in these types of scenarios.
Yeah. I'm spacing on the author's name, but he's from Rochester, Minnesota, and the name of the book is called Retirementology. And I love it. It's really practical. It actually even has exercises that you can walk through, but it really helps you think about a shifting your mindset a bit, to make sure that you have that purpose and are feeling really good about where you're at when you make a change.
Yeah, it's interesting because even though in many cases this won't be a retirement, it's a similar seismic shift for a business owner for sure.
Yeah.
Great.
Well, and I always joke, that's why I love working with business owners. They're just serial entrepreneurs. You'll
Yes.
probably find something else
That's
that you
right.
might do. It's just maybe different, but entrepreneurs tend to remain entrepreneurs their entire life.
Yeah, absolutely. Michelle and Brad, both, I want to say thanks. It was really great to hear from you both, and really appreciate your thoughts. And I think this is a great kickoff to the series.
Thank you.
And I think, Karen, we're turning it back over to you. Is that right?
Yes, thank you so much. I mean, this panel, I learned so much from you all, and I want to make sure to invite everybody to our upcoming sessions. If you registered for this event, which kind of by definition, if you are hearing my voice, you registered for this event, you do not need to register for the other ones. You should get just, calendar invites. If you have any trouble, you can go in and register again, and they should be fine. So next week, we will be talking about transitioning your business to internal stakeholders. Again, those are sort of the people you already know. So that's family members, current employees. We're going to, as I mentioned, and Brad kind of spoke to a little bit, kind of broach the topic of an ESOP, employee stock ownership plan, but that's a whole different level of detail that we won't be getting into about ESOPs, but definitely more detail about other things to consider. The February 9th program will be looking at external sales. So sales to a strategic buyer, just kind of some outside buyer, private equity. And then our last session will be focused specifically on how does any kind of transition impact your WBE or other diverse certifications. Housekeeping matters. We will be sending out the recording along with contact information for our panelists to everybody who registered. You can also see the contact information here, but you'll be getting it in your email. If you have questions that you want to make sure that our panelists in the future weeks answer or address, please respond to the email that you'll get. It'll be from Sarah, with just the question that you want to make sure that we get answered. As we wrap up, I just want to say on behalf of the WBDC, you heard today about the importance of a team as you approach this. And we at the WBDC are so proud of the trusted and experienced relationships and partners that we have with Barnes & Thornburg and EisnerAmper. And just want to ask you to once again join me in a virtual round of applause for Kimpa, Brad, and Michelle. So thank you very much and have a great rest of your day.
Take care.